Welcome to Technests, a dual-bot prop trading system. Today's topic is why most new traders fail at prop trading and how to beat the odds. Most new futures traders walk into prop trading challenges with one focus: make money. What they often ignore is the invisible test underneath. Prop trading isn't just about profits. It's about behavior, discipline, and the ability to respect rules under pressure. A trader might have a good strategy. The setup may be solid. But if they break structure, the account fails. Prop trading isn't a 0-to-1 race. It's a filter. Capital flows to consistency. Systems win where emotion fails. And this is why most new traders burn out quickly, not from lack of talent, but from a lack of logic enforcement. The real reason most new traders fail: evaluations are designed to test traders' habits. Funded evaluations, on the other hand, don't just measure your profit potential. They also measure how well you operate under strict constraints. Common failure points are clear: exceeding daily loss limits right after a winning streak, violating a trailing drawdown with an emotional re-entry, forgetting that passing a challenge requires more risk management than market prediction. Prop firms design it this way deliberately. Evaluations are not punishments, they're filters. They expose traders who can't contain their impulses. Emotional versus automated execution. Human behavior under stress is often predictable. Without predefined logic, traders add to losses, cancel stops during volatility, or scale too quickly after a win. So, the system isn't failing them. Traders are failing the system. Automation solves this by enforcing logic that humans abandon under pressure. Many misunderstand prop firm rules. The rules are not suggestions. They are non-negotiable terms. Daily loss limits must be respected even if you're up overall. News trading bans mean exactly that. Place a trade during restricted minutes, and you're disqualified. Minimum trading days exist to prove consistency, not luck. Here's an example. A trader in a $100,000 NQ evaluation hits the $6,000 target on day 3. But on day 5, they violate the daily loss limit. Consequence? The account is closed immediately. Tools like TradeRx and Dr. Markets embed this logic. TradeRx blocks entries during restricted hours. Dr. Markets disables the system if news proximity is too high. These safeguards enforce rules that human traders often break. Let us understand trading psychology without a system in futures markets like ES, NQ, and GC. Tilt happens fast. Gold punishes fear of missing out entries with sharp reversals. NQ exaggerates losses through wide volatility swings. ES traps trend traders in false breakouts if they enter without confirmation. TradeRx addresses this by enforcing a maximum of 5 trades per session, with trading halted automatically after 2 consecutive losses. Dr. Market scores market regime quality. If conviction is low, automation delays engagement. This isn't just a safety net. It's how professionals stay alive in the game. Let's talk about scaling before structure. One of the fastest ways new traders blow accounts is scaling size without adjusting structure. For example, jumping from 1 to 4 ES contracts without widening stops, or doubling NQ size mid-session, or stacking overlapping gold positions. Proper automation tools are smart to block these mistakes. TradeRx won't allow scaling unless the account is a defined percentage above buffer. Dr. Markets adds macro filters to confirm volatility is supportive before size increases. Scaling should follow a well-defined structure, not emotion. Many traders rely only on entry signals, but context is what decides outcomes. Entering ES near session highs during low volume? Likely a trap. Buying NQ during a Fed speech? High chance of reversal. Running momentum trades on gold during pre-market? Historically poor odds. Dr. Markets grades environments in real time: volatility, liquidity, and macro impact. If scores are low, trades are throttled down or blocked. Context matters more than confirmation. Overtrading in the evaluation phase, most funded account attempts don't blow up in one bad trade. They erode through overtrading. It looks like this. A trader enters gold on a reversal, gets stopped out, re-enters, then re-enters again out of frustration. Or an ES system fires 10 trades during chop instead of 3. Or NQ slippage piles up from excessive entries. TradeRx limits trade counts and delays starts until stability is confirmed. Dr. Markets enforces cooldowns between entries. These automation limits protect traders from their own fatigue. Ignoring time-of-day effects, futures markets have rhythm. ES opens strong, fades mid-morning, and coils after lunch. NQ spikes at the open, but drifts unpredictably by late morning. Gold trends in the London session, but often stalls in US pre-market. New traders treat every minute as equal and pay the price. TradeRx restricts entries to time-tested windows. Dr. Markets blocks trades during news overlaps or session transitions. Knowing when not to trade is just as important as knowing when to enter. The problem of no journaling: most failed funded accounts lack proper journaling. Without logs, mistakes repeat. TradeRx auto-logs every trade, including entry logic and session variables. Dr. Markets tags logs with regime scores. This builds a feedback loop. Without it, traders rely on emotion instead of facts, guaranteeing repetition of errors. So, finally, most traders don't fail prop trading because their strategy was bad. They fail because they couldn't enforce discipline under pressure. Evaluations aren't designed to hand out accounts. They're designed to filter out inconsistency. The way to beat the odds is clear. Respect rules as non-negotiable. Use automation to enforce logic when emotions take over. Treat context and timing as seriously as signals. Journal everything, so every mistake becomes a lesson. In the world of prop trading, systems beat impulses. Consistency beats emotion. And logic is the real currency. Thank you for watching. If you'd like to learn more about how automation can help you survive, pass, seize, and scale prop trading accounts, visit Technests.ai. And don't forget to like this video, share it with your friends, leave a comment, and subscribe for more.